So the JSE All Share index is trading slightly lower, below the 67,000 level today. It comes after two straight sessions of gains as weakness in financials and resource-linked stocks more than offset gains in tech stocks. Chantal Marx is head of equity research at FNB Wealth and Investments, with us now to have a look at the latest movements. Chantal, welcome to Daytime Update. Both the local index and currency have been flat so far today. Have all the gains that we saw yesterday been reversed?
No, not at all. I think that we're still net positive relative to the start of yesterday. But focus is very much moved from the MTBPS or the South African budget and South African specific issues back onto what is happening elsewhere, specifically the European Central Bank and its big decision that it has to make in terms of raising interest rates and perhaps making some other tweaks to monetary policy today. So, I mean, globally, markets have been struggling for direction just as that uncertainty looms.
New data out from Stats SA, I'm referring to the latest producer price index PPI print for September. How insightful is it?
Oh, wow. It's surprised to the upside, unfortunately. And I think if you are going to look at producer prices, you need to understand that this will eventually come through into consumer prices as well. And it does seem as if inflation is becoming a little bit more entrenched in South Africa. So that initial pass through from supply side shocks, or the fact that we had disruptions to how goods and services move across economies from COVID and from the Russian-Ukraine war, really starting to bite and becoming fundamental to the price outlook within South Africa. So a higher than expected producer price index would make me cautious on consumer prices, and in turn, we could still see interest rates increase perhaps a little bit more than expected now that this one has surprised to the upside.
Just speaking about numbers, Anglo American has got its production report out currently for the third quarter, which ended at the end of September 2022. How did they do?
So they did pretty well, more or less in line with expectations if we look at iron ore production as well as platinum production, and then surprising to the upside in diamonds. The reason for that is that they were actually mining higher grade ore, and that has had a positive impact on their production numbers for diamonds. And we also saw a positive surprise from metallurgical coal, which they mine in Australia. Slightly better operational performance from the mines there. They did, however, keep their cost and production and sales guidance intact. So nothing to write home about, I guess, but perhaps just building a little bit of a buffer going into the last bit of the year.
Let's end with Kumba. They've now released a production and sales report also for the third quarter. Do they also have just as much reason to smile?
So Kumba is part of the Anglo American stable. So if Kumba's iron ore production is more or less in line with expectations, then the same can be said for, so if Anglo American is in line, Kumba's is in line as well, just because it's such a big part of the Anglo American group and their iron ore business specifically. But what we saw here is that there are some interesting dynamics playing out because of the issues that they're having getting their coal to market. So because they're struggling to get their coal exported, they've lowered production. But on top of that, they also have some operational challenges there. But I think that the market was fully aware of the operational challenges that Kumba has, as well as the getting it out of South Africa's borders. So very much priced in, I think, and these numbers are in line with kind of adjusted expectations. So Kumba just officially said that, listen, guys, production and sales is going to be lower because of this. Costs are going to be slightly higher per unit, but I think that the market more or less expected that.
Chantal Marx, good to have your time. Thank you.